a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about S&P 500 ETFs. And before that, we wish a very happy birthday to the most popular ETF in the world, which is the SPDR S&P 500 ETF, ticker symbol SPY. It celebrated its 30th birthday yesterday. It was launched on January 22nd, 1993. And since then, this ETF has democratized and revolutionized investing. It has changed the investing world forever. So now there are more than 3,000 ETFs listed in the US with about $6.5 trillion in assets under management. And these ETFs provide low cost, very convenient, and diversified access to so many asset classes, sectors, geographies, and investing themes, which were not even accessible to ordinary retail investors earlier. Now, there are some cheaper alternatives available to this ETF SPY, and we'll talk about them in a bit. But let's talk about this ETF a little bit more, which index it tracks, and its excellent liquidity. One more thing I want to add is that the ETF industry has been gaining assets from the mutual fund industry. Mutual funds have been losing assets, and ETFs have been gaining assets because they are low cost, they are much more tax efficient, and they are transparent and easier to trade as well. And this, the largest ETF in the world, has been losing assets to its cheaper alternatives. Now let's take a look at the index it tracks and its liquidity. So it tracks, as the name suggests, the S&P 500 index, which is the index of 50 leading large cap US companies. And this covers about 80% of available market capitalization. So basically, you are getting exposure to almost the entire US stock market. And this, because of this, is considered one of the best benchmarks of US stocks. So it has about $15.6 trillion in AUM, either indexed or benchmarked to this index, that is according to S&P Dow Jones indices. And this is the most actively traded equity security in the world, with a daily average trading volume of about $39 billion. That is according to the Financial Times, and that is about more than 3 times as much as Apple's stock. And because of this excellent liquidity, this ETF is loved by traders, and it also has a large ecosystem of derivatives built around it. So whereas this may lose its crown of being the largest ETF in the world to its cheaper alternatives in the coming years, or maybe this year, this is likely to remain the most actively traded ETF in the world for a very long time. Now let's take a look at other ETFs as well, which track the same index. So SPY has about 370 billion in assets currently, and it has an expense ratio of 9.5 basis points. The other three, which track the S&P 500 index, are much cheaper, and that is why they have been gaining assets. The one by iShares, ticker symbol IVV, this has about 299 billion in assets, charges just 3 basis points. VOO has about 272 billion in assets. And to compete with IVV and VOO, State Street converted the benchmark of one of its ETFs, SPLG, about 2 years back to the S&P 500 index. So this is like a mini version of their SPY ETF. And this has about 15 billion in assets. So if you're a trader, you will still love SPY. But if you are a long-term investor, then these ETFs are better suited for you, because over the long term, expense ratios matter. In the shorter term, these ETFs will deliver exactly the same performance, but over the longer term, cheaper ETFs will deliver better performance. Now let's take a look at what exactly it holds by going to the quote page on Zacks.com. So you can learn more about this ETF by going to quote page on Zacks.com. You can read our research report and articles, and you can take the link to go to State Street webpage for this ETF. You can read about what exactly it does. You can look at the holdings. We all know what it holds. So Apple, Microsoft, Amazon, Alphabet, Berkshire Hathaway, and Alphabet, the other share class. These are the top holdings in the ETF in terms of sector allocation. Technology is 26%, healthcare is 15%, and then we have financials and consumer discretionary. I'm not showing you the other ETFs because you will see a very similar breakdown of holdings and sector because they all track the same index. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to all our videos so that you do not miss anything. And I'll see you next week.